Welcome back, guys, to the Foundation for Greatness. My name is Joshua LaFawn.
Zala Gonzalez.
And today we have Matt with TrueBooks.
Super special guest.
Yes, he's the CPA that we've been talking about. Or an accountant for some of you people that do not know what a CPA is. Welcome. Thank you.
Thanks, guys. Appreciate it for sure.
Yeah.
So tell us a little bit about yourself.
For sure. So my name is Matt Bontrager. I'm a CPA, so Certified Public Accountant is what that calls, or is what that stands for.
Nice.
Quick story. I grew up and was born and raised in Vegas, which I feel like that's so rare nowadays. Usually don't.
Yeah.
So I was born and raised in Vegas, went to Western High School, then went to UNLV, got my degree there. When I was working at UNLV, I started to work at Wells Fargo, was always interested in money. And got a job at Wells Fargo, and then going to school. When you're graduating in accounting, they always preach to you, go to the Big Four, which is like the Big Four accounting firms. So that's what I strived for. I made that happen out of school, kind of earned my stripes there, did 2 years there, and then have always stayed in public accounting. A lot of people get confused when someone's an accountant. There's really two paths you can take. You can take going into public accounting, which is serving a multitude of clients. Or I can go work at like a Caesar's Palace and be like an accountant in their back office, which would be like the industry. So I've always chose and stayed in public accounting, which they say is a little bit tougher because you have like tax busy seasons and that kind of stuff. But so I stayed there. And then through the course of working at different firms, I've done real estate. I've done cannabis was the last firm I was at. That was a really interesting industry. I've always stuck to real estate because that was my sort of focus personally as like a wealth building strategy. So then through those connections, saw Ryan Pineda online and DM'd him, and he was looking for a bookkeeper. And I'm like, dude, I could do this with my eyes closed. Like, hire me, I'll do this. And met him in his office. And then from there it took off. So I started working with Ryan. I was still working a W-2 job at my last firm while working with Ryan. Most accountants that want to leave and go on their own, they'll slowly build up their book of business of clients on the side. And then as soon as they could jump, they'll jump. That jump for me happened in December of 2019. Quit my job.
Perfect timing.
Yeah, I know, dude. Right before, dude. I know. And then 3 months later it hit. So I went in with Ryan and was like, yo, we could turn this into a business servicing mainly real estate, flippers, developers, agents, stuff like that. And dude, January 2020 is when we kicked it off, and we kind of talked a little bit before this about the revenue numbers, and the growth has been insane. So that's where I am. Nice. My first business.
So with TrueBooks, are you guys just here locally? What is TrueBooks like?
So TrueBooks, the name was founded on like most people don't understand accounting. They don't know what they're looking at when it comes to numbers. And most people, when they do their own accounting, it's not accurate. So we thought TrueBooks being the true numbers. Because that's going to help you the best tax-wise and things like that. So TrueBooks itself, we're a remote firm. We're a public accounting firm. So we have CPAs and people who aren't CPAs. Maybe they're waiting to take their tests and things like that. Right? We're a team of 9 or 10, and we're all around the country. So we have South Carolina, we have California, we have Oklahoma, Nevada. But you could say our sort of main hub is here in Nevada. But that's what's nice. I was just telling somebody about this earlier. Is like, for me to make money now, all I need is a laptop, and I can generate a couple million a year. With all these like industries, like I don't have to be anywhere. So that's been the flexibility, especially having a family and stuff. So so TrueBooks is a public CPA firm mainly focused in tax for real estate clients.
Gotcha. So let me change the speed a little bit. You said you have a family, so
I do.
How many kids do you have?
I said I do as if I'm like sad about it, but I'm not sad about it. I'm not sad at all. No. So funny enough, my wife, when I was an intern going to school, she was my boss. She was a manager there, a senior, and we stayed in touch after. And so she's now my wife. Her name's Sarah. We have 3 kids. So our first kid, 2.5 years old, and then we have 9-month-old twins. So we wanted 2 kids. We were like, okay. First we wanted no kids, and then we were like, all right, we'll have 1 kid. The timing worked perfectly. We were like, okay, 1 more right before our first son is 2. So their birthdays are, 20 days away from being 2 years apart. So it was right on time.
That's awesome.
But we just overshot it by 1.
So now you're gonna have one big birthday party, and then and then one
An okay
other
one.
birthday party 20 days later.
Yeah, so yeah.
Like, man.
They'll probably get a
Leftovers from the big one.
Exactly. Yeah, that was a weird thing too,
That's
right? With the
awesome, though.
pandemic, yeah, we never gave our son a birthday. So this May it'll be popping off. We'll have some big birthdays for
Nice.
May.
Nice.
Yeah.
that's
But-
great.
Exciting.
Yeah, so family life is good. That's why what we were talking about before is working flex schedules and remote really helps with a family. So that's
Yeah,
what's
definitely.
that's what's been nice.
Yeah, I would say that's something that I enjoyed because before I did real estate, I was I had a normal 9 to 5, and it's actually really hard and tough to always see your kids and everything. And then when I got into real estate, I came into the office, and then now I'm more at home than anything. I'd rather be there. It's a better environment, and then I get to see my kids all the time, pick them up from school, all that stuff. So it's awesome. So it's a
Yeah,
good
the
feeling.
flexibility is like my wife is one of those people that if her work tried to make her come back, she's like, "No, I'm quitting." Because now it's like you realize how much time is wasted being in an office when you're forced.
Yeah, the commute and everything else.
It's all about productivity, not like, just like sitting in a chair for 8 hours.
Exactly.
So yeah,
Yeah.
that's
That's
what's been
awesome.
nice. Yeah.
So do you have any questions or anything?
Yeah. I was gonna ask, is there a specialty for CPAs? But I think you answered that pretty much. You can go into whatever industry you want, almost.
Yeah, so I chose real estate because that's my I hate passion, but passion, right? Like that's what I'm interested in, right? Like that's how I want to make my money long term and what I see as a good investment. So that's what I chose. But yeah, as far as being a CPA, which you bring up a good point, a lot of people think that, so before when I got out of college and became a CPA, right? You have to pass certain tests and things like that.
Yeah.
Everybody thought that I did tax. And I'm like, dude, I don't do taxes. So don't ask me these tax questions. Because you can go into audit or tax. Like my wife is more on the audit side. She's not a CPA, but she's in the audit side. So I ended up transferring over to tax because I found it, as an auditor, clients don't really like you. You're there to check their work and you're ticking off and you're managing them versus like a tax clients, they love us because we're there to save money. So the relationship was so different. So I went into tax. So I would say for any CPAs, they really have to make that distinction of, do I want to do accounting and like audit work or do I want to do tax? And then when I chose tax, like the client relationship is just so much better. And then from choosing tax, there's so many industries you could pick. Like cannabis alone is its whole different animal. Like when that started to come out and get legalized here, no CPAs would touch it. The CPA community is a big Mormon community.
Yeah, there's a lot of, I know that like when it comes to cannabis, it was like when it first got here, it was all frowned upon. Everyone was like walking on eggshells, like, I don't know, I don't want to touch it because if I do. So how was it like, how was it working with like the cannabis, community? Because it's an actual community.
Oh, it
own.
is. It is.
And now it's not really frowned upon. Now it's more like open and out there since it's been around for a while, legalized. So.
Right, and that's a good point. And now it's not frowned upon because there's big dollars behind it. And now you have it. It's not just your little weed shops on the corner. It's these. They look like Apple stores. Right. So
all fancy.
yeah. So
Especially in Vegas.
you see all different kinds of people coming in and out of these stores. And so now that the big money's behind it, a lot of more people are paying attention to it. But dude, when we were like in on the trenches at the ground level, it's like a normal business owner or a client of ours that we want. They have an attorney that they're working with that can send us documents. They have an accounting team, so their stuff is very clean and proper. Dude, these cannabis companies, there's a ton of cash handled. So you're dealing with manual paper logs and their accounting is just a mess. So it was until the big money got behind it to where they could hire. So we were an advisory firm for people to advise them on like, hey, we know you know how to grow weed. Yeah. But like you need to learn how to run a business now too. Like it's not just that now. So it was insane because it's just so different from everyone else. It was like the green rush that they were calling it. And that's really what it was.
And I know that they also accept card and stuff now. And at the beginning they didn't. So how is that? I guess you want to say federally legal, is that like?
It's still not.
Well, I know it's not federally legal, but is it like how can they accept card?
Well, it's certain type of cards, right? Like I don't know if Visa is still accepting it. So it's a lot of people are taking the federal government approach, which is, hey, this is illegal. We sort of shun upon you doing business with them. Versus state localities, they get to determine whether it's legal or not. Like in Nevada, it's legal. Yeah. So like large players like Visa, MasterCard, I don't think are going to allow their payment systems to be in these shops, but that's why you see all these smaller ATM brands popping up and smaller card brands. And I don't doubt crypto's already involved in that space. So, but it's really until it becomes federally legal, which really means they're going to take it off I believe it's a Schedule II substance now. And until they declassify it to a 3 or whatever that is, then really no one's going to touch it still, because you're dealing with something that's legal at the state level but illegal at the federal level.
Yeah.
So and that's why it's crazy to think that we even have to deal with that. Like, get on the same page, right? Like,
Exactly.
And what are we bringing in? We're bringing in close to like a couple billion, or
I don't doubt it's in the billions in revenue,
Yeah.
for sure, which is hundreds of millions for the tax, right? So as far as taxes for the state. So, and that's why once the big money gets behind it, it all starts to make sense. Which helps though, because big money drives better processes most of the time. Versus these guys who are like coming from California, whatever state, they're like, I know how to grow weed, but they're like, okay, let's make it a business and not just like growing weed in a farm anymore. Like we gotta,
garage.
yeah, exactly. So that's where that industry was very specific. And back to accounting, no one would touch it. Yeah. There's a big Mormon community in the CPA community, and just like more older heads. Like, I'm a younger accountant, a younger CPA. People meet me and they're like, you're a CPA? And I'm like, yeah. But most of the older guys who are accountants and CPAs, they don't even want to touch it or take the time to learn about it. So it was a huge opportunity. So when you talk about which sector do you want to go in, now I focus on real estate, but the cannabis side was very interesting.
You're doing well too with real estate, man. So that's crazy too.
Real estate, there's, as you guys know, there's so many touch points. So you can do so many different things. You can be a long-term investor, Airbnb arbitrage, real estate agent, developer, flipper, wholesaler. Like, there's so many things.
Yeah. So I have a couple friends that are agents, obviously, and they have questions in regards to like, I have an LLC. Is it beneficial to do an S corp or is it not? Or like, they just want to know, like, should I S corp it right away? Should I do LLC? Like, that's the $1 million question right there. They always we're always asking those questions.
I got an LLC, so I don't know. Maybe I'll get an S corp after this.
Yeah, you're bringing up. I bet you would need an S corp. So this is the number one topic.
Fall into that category.
Yeah, this is the number one topic. So like, here's what I would focus on if you're a new agent or someone that's done a couple deals. The first big misconception: you do not need an LLC to take deductions. So if I'm an agent that has my license and I do a deal and I make $10,000 in commission, I can take some of my clothing as an expense, my meals as an expense, paying an admin as an expense, photography as an expense, the equipment that I'm using. And I don't need an LLC to do that. So some people in that scenario would say, okay, I've literally had this happen. Okay, I made $10,000, here it is. And I'm like, well, do you want to send me like any expenses against this? And they're like, can I take them? And I'm like, oh my gosh. Yeah, you can. Because now you go from, what if I can take that $10,000 and get it to $5,000 and only pay tax on $5,000, right? Yeah. So the big misconception is you do not need an LLC to take expenses. So that's the first thing. So notice how everybody should be keeping good records and like books of what they're doing. Like, that's why we tell people, get a separate bank account for your business, right? Okay. Which we'll get into that. So the next step is so here's my thought on getting an LLC. I'm not an attorney, right? It's more of an attorney thing, but is the second you're in pursuit of income and going to spend money to make money through advertising or whatever, I would get an LLC. You're doing business now as an entity, so you don't want to subject your personal assets and things like that to your business operation.
Got it.
So I would get an LLC in place the second you have the mindset of you're going to start a business. Next, what I would do from there immediately is get a bank account so that now all of your business income can go into that bank account. All of your expenses can leave that bank account too. Why? Because now at the end of the year, when your accountant is like, hey, I need your stuff, you can just go through one account and compile it. You're not crap, I spent money on my personal credit card, my mom's credit card, my grandma's credit card, and I got to pull all these different things. It's all organized, which that happens all the time. Yeah. So first step, LLC when you're ready to start the business. Second step, getting a bank account. Third is really, I would say like an accounting software like QuickBooks or something. I'm not plugged with QuickBooks, but that's what we use. Yeah, I love it. It's a great software. So after that is, okay, well, hey, now I'm making some money. I'm writing off some expenses. When do I do this S corp? Okay. And let's look at that's a question. So here's when you determine this. So to back up, whether you have an LLC or don't have an LLC, if you're a small business and you're not an S corp, you're going to file on your personal tax return. You don't have a separate business tax return. It just goes on your personal tax return for what you've done, your activity. The second you decide to become an S corp, you have a business tax return now. It's its own entity and its own business tax return. And that cutoff is typically when you net like 45 to 50 grand when you're netting. Wow. Some people think gross, and I'm like, no, not gross. Because why is there a cutoff? There's additional costs to doing an S corp. Yeah. It's we're not going to count setting up an LLC because, like I said, I would do that no matter what.
Okay.
Whether you're ready for the S Corp or not, I would get the LLC.
Gotcha.
But having an S Corp is you have to run payroll for yourself now because you're an employee of your own business. So payroll per year, let's say, is $500. You have to have another tax return done. Let's say that's $1,000. So you're $1,500 in the hole there for the operating costs. And it's more operational stuff on the back end that you have to do. So that's where the tax saved has to make sense for you to do that. And that's where when you're netting like 50 grand is when it makes sense to say, hey, to your accountant, don't try and go out and do an S Corp yourself. Like,
Just a little cool. Huh?
yeah, exactly. Like you would set up an LLC, that's fine. Don't pay somebody $3,000 to set up an LLC for you. It's very easy to do at the state
like
website.
$4.99 or something like that.
Yeah, so the state fee is $425 here in Nevada. It's cheaper in other states. We're actually on the higher end. So what I would focus on there is once you're an S Corp and you've determined that you're ready, talk to your accountant and then say, hey, I'd like to make this election. Your accountant will make, because all you're doing is you're telling the IRS, hey, I want to treat my LLC as an S Corp. It's like, think of your LLC sort of wearing a hat now as a different designation, because a lot of people say, should I do an LLC or an S Corp? And I'm like, no, they're the same, but you just have to make that election when it makes sense.
Got it.
So
it's about the cost.
exactly, it's about the cost. So like 50 grand net income from your business is when it makes sense to do the S Corp.
Gotcha. Okay.
Cool.
Yeah, because I'm always like, because I have a CPA, and then they're always asking me like, hey, like, what does your CPA say about this? What is it? I'm like, I don't know. Like, you go and ask a CPA or ask here's their number, and and they're always asking like that's like the $1 million real estate questions. Like, when do I start an S Corp? So, and another question that came up is another one that is a brand new one. Is so since I do flipping and I do take in like rental income and stuff like that. And then I also have friends that do small businesses here and there. In regards to doing accepting Apple Pay, Venmo, and Cash App, like those apps now. So you know how they're now, So now you know how they're now.
Gotta send 1099s.
Yeah. So is it just Venmo and Apple or Cash App, or is it all of those payment systems that you now get taxed after the $600, or what falls under that $600? Like,
So the reason that they're doing this, so keep in mind, the reason that companies do what you're calling is a 1099K.
Yeah.
1099K, or what we have to cut to certain contractors, is a 1099 NEC, or like they used to be called, like a 1099 miscellaneous.
Yeah. Got it.
The reason for these forms is they're tracking mechanisms, because if I pay you $10,000 to do a job and I want to write that off as an expense, I cut you a 1099. The IRS, when they see that 1099, goes, okay, Matt paid this guy $10,000. Now when they see your tax return, if they don't see at least $10,000 in revenue, they're going to think, what's off? This doesn't add up. So that's the purpose of these forms. Okay. The $600 thing is a joke if you ask me, but it's a little bit of oversight. But now, one thing that a lot of people are freaking out about that they shouldn't is, when you pay people through Venmo, there's a little box that I've seen recently that says, is this for services or something like that? They ideally shouldn't cut that person a 1099 unless that box is checked, because that means, like, if I go out to dinner and reimburse somebody, don't 1099 me for that. That's not a business transaction, you know what I'm saying? So, but there are platforms like, if you're with like Etsy or PayPal and things like that, the thresholds where I think it's like $75,000 or so many, like 150 or 50 transactions, that it'll automatically kick you a 1099K. And so what's important to note with these is, if you get one, do not try and not report it. Because if you don't, like I just said, we see it all the time. The IRS is going to catch that and say, hey, this person said they paid you. You never said you got that money. So what's the discrepancy? So, but they shouldn't be worried about it, because if they get one erroneously and then they shouldn't have got it, there's still a way on the tax return to make it right. But don't think that not reporting it and leaving it in your mail or shredding it is the answer, because then you're just going to deal with headache later.
Gotcha.
So, but ideally, they should only be cutting these if you're doing it for professional services. That's when 1099s are like, paying a camera guy, paying someone for photography and real estate is the biggest one. So that kind of thing. So what I would say to that is, if you get one, don't run from it, report it, but talk to your accountant and say, hey, like, this was for reimbursements of, or maybe some of it is half and half. Like, you get a 1099 for $5,000 and 1,000 of it was really personal stuff and 4,000 was business. There's a way to make it look right on the tax return.
Gotcha. So you can still it's still going to be reported as the 5,000, but then you're going to have to justify it on the tax.
You would back it out and say, hey, something like, hey, this was, non-business or something like that.
Gotcha.
However, you have to label it on the notes on the return, but that's where it makes sense that having TurboTax, I'm a fan of TurboTax. They're not a competitor of us. There is a market for someone to use TurboTax. Yeah. But when you're running a small business and you have 1099s and things like that, it's time to level up and get an accountant, right? That you can talk to and help. Yeah. And so, so that's where you want somebody who can answer those questions for you if you get into those situations.
So if the government basically starts seeing 50 transactions from one person always sending you, $600, $700, $800, $900 here and there throughout the year, they're probably going to flag that, correct? If they don't classify it as a service. So if I get Apple Pay every month, $600 from something, but they don't classify it as a service, but I'm actually giving them service. Really? Is that a gray area or?
Well, I don't think that they're going to $600 a month.
Right. So I don't think that they're going to catch that because one, it wouldn't be the government; it would be the platform that you're dealing with. Okay. And from what I heard, that didn't go through the whole $600 every bank account with all that. It didn't pass. So, but yeah, no, they wouldn't see something like that. But the only thing I will say is the number one form of tax fraud is underreporting income. Oh, yeah. So it's as long as whether you get a 1099 or not and you're reporting the income, you should be good.
Gotcha. Okay.
Cool.
Yeah, because I had a big debate with my friends, and they're like, "Oh yeah, no, this about 600," and I'm like,
"Yeah, everybody."
They're like, certain apps do it, certain apps don't. I'm like, "What are you talking about?" So I'm happy. I understand the $10,000 rule makes sense. But
$600, that's crazy, dude.
Micromanaging, I'm telling you.
That's where I don't think that passed. So I don't think anybody has to worry about them overseeing bank accounts because that would be such an issue.
Oh my gosh. Yeah, because I know that the government is trying to do their own, not necessarily cryptocurrency, but they're trying to do their own digital currency.
Yeah.
So
to replace cash.
So they're going to replace the cash into doing a digital dollar. Mm-hmm. So it's been in the works since last year. Because that's why they're investigating cryptocurrency. So it's not a bad thing that they're investigating it. It's just they're trying to find out the details and how they can implement it, and then that way they can start digging around.
How the market would really accept it. Yeah.
Yeah.
That makes sense for sure.
So it's interesting. It would be interesting to see. So into digital currency, crypto. So how is crypto? How is it taxed? With NFTs with. If I trade, Bitcoin for Tether or vice versa, or how's it all taxed? Because I do it all the time, and I'm like, am I doing a taxable event? But I probably am all the time.
Yeah, no, that you probably are.
NFTs,
so with crypto, it's taxed as a capital asset. So a capital asset would be like a painting or a home or something like that, right? So or like a stock. So when somebody buys crypto, it's a non-taxable event. Okay. But that's too much of a blanket statement. Did I buy the crypto with Ethereum? That is a taxable event. So what's a taxable event is cash, US dollars to Bitcoin is not, right? So fiat to Bitcoin is not a taxable event. But the second I buy something with Bitcoin, every coin to coin is taxable. Which is a pain because now you have to go back to dollars to see what that gain or loss was.
I was just going to say, what if you lose money then?
Technically it's a loss, right? But so that's where I forget the name of the platforms, but there's good platforms that'll keep track of your basis because that's the biggest thing when you buy a piece of art or buy a stock. And similar, if you're with Merrill Lynch is going to send you a statement every year that says, hey, you bought Facebook at $100, sold it at 50 or sold it at 150, your gain is 100. No one's doing that for crypto unless you're with a big brokerage now and with all the offshore wallets and platforms and things like that. So, it's still one of those wild west sectors, but it's something that the IRS is definitely going to crack down on. They straight up for the last 2 years, there's a question on page 1 of the return that says, were you involved in crypto? Did you buy, sell, trade, or exchange anything with a digital or virtual currency? And what's crazy is there's a stat back in 2018 or maybe 2017, there were only 900 tax returns reported with crypto. Wow. When we know it was in the millions. That way more people are dealing with that. So the fact that there wasn't even 1,000 tax returns that were reporting this activity, there's still a lot of people trying to dodge it. And some are going to get away with it, but some are going to get so hosed and it's going to be bad.
Yeah.
So that's where, like, for now, the most important thing I would say with crypto, try and keep good records, accurate records of what your basis is in these coins.
Yeah, I gotta get those apps from you because I need.
You'll have to look
I
them
need
up.
to.
You just
track
dump the
those.
data in there and it'll go back and calculate your basis
okay,
dates.
okay.
Because, like, from a tax return perspective, which this is good, if you come to like an accountant and you say, hey, I have crypto like activity, all we care about is 4 things: purchase price, purchase date, sale price, sale date. That's all I want to know.
Gotcha.
Notice how all of that is in US dollars, fiat. I don't care about what platform and what your gas fees were and all that other crap. I just want to know what it was, what you sold it for, like a stock. When did you, because why do I need to know the dates? Was it short term or long term? Why do I need to know the amounts to calculate did you have a gain or loss? So when it comes to accounting and tax, that's all we need to know. But from an operator or someone trading crypto, you're going to want to see this and have all this data laid out. So I would try and get with one of the sites for sure.
Gotcha. And then, so, like for example, last year I probably, because I play the stock, I play crypto to do it as an investment. I play stock market as a gamble because I'm a gambling man. You know, I'm from Vegas.
Vegas,
so,
yeah.
Yeah, so I love doing that. So I play options all the time. So I lost money last year in options. Can I basically take that loss versus crypto or?
Since crypto is capital,
I was
like
hoping
a capital
so.
loss,
That's why I lost the money.
So like, right, like that's for example, like let's say somebody makes 100,000 on a W-2,
Yeah.
or like being an agent, and then you lose 100,000 in the stock market, you cannot net those. You can only do 3,000 per month or 3,000 per year. What you can take is capital against capital. So if I have a $100,000 capital gain from stocks and I lost 80 in crypto, boom, I can net them and only pay on 20.
Oh, okay.
So you can net capital and capital. Like think of the income in certain buckets, and you can only net the buckets against each other. So, but yes, you, like in that case, if you're losing money, let's say in the stock market on options, and you want to net it against gains with crypto, you can.
Gotcha. Okay.
Yeah.
That's good to know.
And that's something to make sure that your accountant knows, right? Because if when it comes to your tax return and they only report your income from being an agent, flipping and all that, and then your gains from crypto and they never hit you with and right include your losses from the options, then you just got hosed.
Oh yeah, no doubt.
So paid more tax than you needed to.
Did you guys hear that story on the staking? Where they so you could stake cryptocurrency where you basically get higher interest for like 30, 60, 90, 6 months or whatever it is. So the government was trying to, or the IRS was trying to come after these people. They're all like back east, like South Carolina or something like that. And they were trying to say that and they didn't pull money out or anything, that they were trying to tax them on the money that was staked, so the high interest that they were gaining. And they actually beat the IRS. So now the IRS and the government are now switching the regulations and rules on staking and all of that. So it was pretty interesting.
Yeah, I never heard
Yeah,
of
what
that.
happened with that is,
You
let's
gotta
say
get
you,
into that investment.
yeah, right. Let's say you stake like 5,000 Ethereum,
Okay.
and then they're paying you $100 worth of their coin every month for letting them borrow.
Be like
your-
10% or
they give
like
you
high interest.
huge interest, yeah. So let's say, so what they said is the IRS actually kicked them back a refund. They denied the refund, I believe,
that's what
because they were like, hey, I don't want to accept this because then it's going to essentially assume that you're right. And so what they came out with, yet there's no formal guidance, but they, like based on their actions, you're not going to get taxed on what you're making while you're staking crypto yet until you sell it. So like if I give them coin A and they're going to give me coin B for borrowing my coin A, then I don't pay tax on that coin B until I sell it.
Yep. Okay.
When normally, like if I lend money to Ryan Pineda and he's paying me monthly interest, I pay tax on that.
Oh, okay.
You know, or like if I'm a hard money lender. So yeah, so that was a big, I don't want to say case because it wasn't a court case or anything, but it was a big event that happened for sure.
Yeah. Especially in the crypto.
Yeah.
It's called staking, yeah.
Yeah,
Which are
yeah,
Check that out. Yeah.
essentially just lending the crypto, yeah.
Okay.
Yeah.
Yeah. That's pretty cool.
And then, so I had a few questions from people like on social media. So they were saying, so do you need an advanced degree or any type of degree, or have to go to college to become like a CPA?
Yup. And I say that with like pride because I'm like, we hear this a lot with EAs because there's like not this big feud between
EA?
and okay, so they're an enrolled agent.
Okay.
So an enrolled agent is licensed by the IRS.
Paralegal, kind of.
Sure, no, kind of, yeah. But so in the tax world, they have to pass 3 tests with the IRS, and then you can earn your enrolled agent license. And you're more tax focused. A CPA is so you're licensed by the state board, and any other state you want to do practice in, you have to, right? If you're trying to do CPA services, which isn't just tax, you'd have to be licensed in that state.
Yeah.
You have to have the equivalent of a master's degree or 150 credits, and then you pass 4 tests, which are just extremely hard. It was one of the worst times in my life. Oh, it's super hard. And listen to this. The tests are, if you fail, the second you pass your first test, you have 18 months to finish them. And if you lapse one, you lose it. You have to retake it. So you have to pass them all. And like to get further, you can only, at least when I was doing it, you can only take the test the first 2 months of the quarter. So Jan, Feb, you can test. March, it's a down month for grading. And then April, May, and then down. So it's hard. It's stringent. And it's a good thing to strive for, because I hear a lot of people like, oh, do you think it's worth it? I'm like, hell yeah. Anybody will talk to me with the letters that I have behind my name. Because it gives that sort of level of like, oh, you're a CPA. Because that's another thing too. Like you were held by the state board of like being a public accountant. So you have the public's interests best at mind, you know? So, but I would say, yes. So yes, there are qualifications. You have to have, Nevada's one of the hardest, Nevada and Utah, but you need essentially 150 credits and you have to pass the 4 exams. And then you have to have work experience. So remember when we talked about the public versus private accounting?
Yeah.
Public accounting, they deem to be harder. So you can either work 2 years in public or 4 years in private.
Oh, wow.
And then once you pass the education, the tests, and your time in the industry, then you can earn your license.
So why do you say Nevada and Utah are the hardest?
Because they're the ones that, from my understanding, they require the highest amount of education.
Okay.
So like I don't have a master's degree. Most accountants don't need it. They just get it because it's the 150 credits. I did that, if you've heard of it, that CSN high school college program out here.
Yeah, okay.
So I did that. So I had college credit. I had enough credits to do the program to where I could just like immediately out of college start testing. But yeah, so that's why but I knew a girl who we worked at the Big Four. She lived in Florida and took Alaska's test because she signed up under Alaska because they had less requirements. She was able to do it before she finished all of her school. So, but yeah, so it's hard, but, yes, there's tests that you have to pass, but I think it's worth it for sure.
Gotcha.
I mean, with real estate, it's like you fail it, you go back. You know, it's like you can fail as many times as you want. There's people that like 6 times, dude. I'm like, what? I passed like
3.
Took you 3?
3. Yeah. 3 for me.
It took me a couple so the 4 tests in accounting or for like a CPA, there's tax, there's audit, there's financial, and then I'm spacing it out, BEC, like business concepts. But dude, they're so hard. Like now, they're like 50% multiple choice, 50 written, or like long form questions. Like it's very hard. That's why like it's tough. So people who get through it, it's like it's gonna be hard, but it's super worth it.
Gotcha. So let me ask you this. So based on all those tests and all that stuff that you studied, do you use any of them?
Yep. That's another reason why. That's okay.
Because in real estate, like
Yes.
we study all this and then we use probably 10%.
Yes. Okay. So I will say some of it we don't see, but that's one thing that I love about like, because they're like, oh, like I think about it with my kids, or my kid's going to go to college. Who knows with this kind of environment?
Yeah.
But I think about it and I'm like, luckily that the stuff that I learned in school, I use daily. Like, and that's where I was just talking about this literally before I walked in for this podcast was, if I want to hire people on my team, it's expensive because we're like, they're college educated. Maybe they're CPAs. Like they have a lot of experience and knowledge. So it's like, I can't hire somebody that's just fresh out of the gate because they can't really do the work. I'd have to train them. So, having experience and going through school, at least for an accountant, makes sense because you use those skills.
Gotcha.
But it is, you're right. Some people have degrees. Like Ryan has an economics degree and he's just like, this is trash. Because he's learned way more, you know?
Yeah. And I know
Most business degrees, like they're all just as fancy with a plaque and everything.
Yeah, exactly. Yeah. $70,000 later, right?
Yeah, exactly. Yeah.
And then so I had a lender ask me a question. So what's the process to amend taxes? Is it like a rigorous process or like what's the process?
No, so quick tip there though. If you're looking to amend your tax return, I would always go back to the previous accountant that filed it for you.
Okay.
Why? Because they already have all of your stuff in their system. Like we have clients that come to us now and say, hey, can you amend? And we're like, yeah, but now I have to go through and enter all of your information for the first time, right? Versus your old accountant pulling it up, changing one number and they're done. So I would always say try and reach out to your previous accountant who did it. But the process of amending isn't bad. You have 3 years to do it because that's the look back period or statute of limitations to do it. But yeah, definitely though, like we see amendments all the time. If something was missed, like a 1099 or someone gets a letter, like larger clients get them all the time. They have to amend because if you're invested in certain partnerships, real estate syndications, like, oh crap, I forgot this form. I have to go back and amend. So, it's very common.
Gotcha. Yeah, because I always have clients, and that's another thing too. Is I had clients before where they had to go back to one of like the big tax places like H&R Block or something like that, but they were closed because they were buying in either like January, February. No. Sorry, opposite time of the year. They were buying in like September, where the branches are closed. And they're like, I can't go to the branch, I can't get it amended. So
that's true, yeah.
Are they able to, they'll probably get charged for it, but they could probably go and get it amended.
Yes, they would be able to go to a different firm and get it amended for sure. But yeah, that's a good point. Yeah.
Gotcha. Okay.
That's good, yeah.
That's funny though, you bring up that topic because like we talk with lenders a lot, and the one thing that these lenders now are just really irritating us with are these letters. They always need, hey, we need your CPA to write a letter and say, I'm just like, dude, there's so much liability that comes with that. They just want to stack the file with it. So I just did one yesterday. I'm just like, guys, they need to stop asking for this because it's so pointless what they're asking us to say.
What are they asking for, Matt?
Oh, like, hey, I need you to confirm that this person owns this much of the business, and I need you to confirm that they've been in this industry for so many years. And I'm like, guys, ask them. They'll tell you. And the ownership, for example, is on the tax return that they have.
Gotcha.
So it's like you're asking me questions that you have documents that already say, but you want me to say it, and you want it on my letterhead explicitly, and you want me to sign it. And
now you put a liability if...
Oh, for sure, I think, yeah.
Gotcha.
And that's what bugs us is because we're like, you can find this information out, you already have it. You just want to stack your file so your underwriter can feel more comfortable.
Yeah.
So that if it ever came down to finger pointing, well, it's like, oh, well, your CPA said this.
Yeah.
I'm like, well, he told me. That's what I'm going to say, So we have to do due diligence, obviously, but that's another thing. When you're a CPA and you hold specifically hold the letters, you're held to really strict standards of what you write in certain memos. And so the whole point of being a CPA, because what you might hear is, well, hey, like I don't use honestly what my CPA license gives me the power to do, which is give an opinion on financial statements. That's what being a CPA really allows you to do. I do tax work now. I don't do that. But if a CPA writes a letter and gives like an opinion on something and says, hey, these look accurate or those kind of terms, it brings a lot of liability because that's what we're now being governed by is to keep public interest safe. So if you have a CPA with their license saying that these numbers are accurate, there's a lot of liability that comes with that.
Because if they go in default on the loan.
Because now you have people relying on the numbers. So it's like, that's why people look to CPAs as like, hey, you know what they're doing. Tell us if this is right. And it's like, that's why in audit, it's great. You get big fees. Like the firm that I worked at, our clients were MGM, Caesars, stuff like that, like huge clients because they have to come in and tell the SEC and give shareholders confirmation and, feel goods on like that their numbers are right. So if it trickles down to small businesses too, right? So yeah, that's where on the talks of lenders and, working with them and what they request and stuff, it brought that up.
Wow. Yeah, lots of liability.
So are you allowed to do your own taxes?
Oh, for sure.
Oh, okay. Yeah. Oh, well, duh. Like we could. Never mind.
You can sell
sorry, viewers. That was a brainless one.
No, like you could though. Like you can actually. I've seen this. You could print your tax forms and do it by hand.
Yeah. Wow.
Which is insane. No one would really does that.
I did that when I was like 17 or 18.
I did my tax. Yeah, when I was like 18.
I think it was a 1099 easy or something like that.
Yeah, easy. Yeah. I'm a fan of Turbo. Even as a CPA, before I did my own taxes or did taxes, I used Turbo. It's a great software if you have a simple situation. Like the people I tell to use Turbo, if you're a W-2 employee and you're not self-employed and you maybe have like a 401k, boom, Turbo. You'll get it done in 10 minutes. There's a right answer for that return. Like it's very easy. But if you're a business owner, you have so many, there's so much flexibility that it's like, if you really want to maximize, you need to hire like someone that knows what they're doing. Which we like to say more of like an advisor.
Gotcha. Have you ever been in like an audit situation?
I was just going to ask that. What happens? What's the process, Matt, if you get audited?
Yeah. So the first thing you'll receive in the mail is an IDR, which is an information document request. They're going to say, hey, can you send us, for example, your profit and loss says 100,000 of income, 20,000 in office supplies. and they might pick that number and say, hey, this looks odd. Can you send us the ledger for this number? That's why I tell people it's so important to use like an accounting system, because for someone else to go back and see what makes up that number could be grandma's bank statement, my mom's bank statement, my bank statement, versus an accounting software. I click that 20,000, it tells me exactly what's in there.
Okay.
So that's the importance of that. But dude, an audit, a lot of people freak out when it could be so simple. Like so you're sitting across the table if you're with a field agent like an auditor, and you're going through documents and you're talking about, hey, was this right? Or, it's correspondence through phone calls and things like that. So, but yeah, the process is, hey, we think this looks odd. Show us the support for it. Do you have support for it? Does it make sense? If it makes sense, you're good. Okay. If it's challenged and you're overturned, then there might be additional tax due. Like, hey, of that 20,000, we think 10,000 isn't, that shouldn't have been written off. You're like, okay, you pay the tax on the, on the lost amount.
Cool.
So it's not that, it is a big deal, but not that big of a deal.
Dude, it's another person. If they're here, you bring them donuts, you be nice to them. You're like, hey, let's get through this. What do we have to do? And that's where on the cannabis side, we've done audits, and those were crazy, because even the IRS people, they're like, I don't know how to do this. They don't know. And we're like, we know. Well, listen to us then. Then they're like, we're the ones that are subject experts. They don't even know.
Yeah.
So it's everyone's just trying to do their job.
Gotcha. Yeah, no, I got audited when I was 21. I was doing this like small, I wasn't even the business owner. They paid me to do have computers in my house. So like they were having eBay accounts for each one, because you know how eBay tracks the IP address. So if you can't have multiple accounts on one IP. So they had, it was like, I was running it felt like a farm of computers, but I had like 8 computers in my house, and then just had them all plugged in, and they were just running. So they paid me, it was like $900 to $1,000 per computer. I was like, yeah, keep bringing computers.
Yeah.
So they were also using my eBay accounts. And so I created like 8 or 9 eBay accounts, and then they stopped doing business. So I was like, whatever. Years later, I got something in the mail from the IRS. I opened it up, I'm like, 25,000.
Yeah.
I can't pay that. Like, what's going on? And so I called them. They're like, oh yeah, just come in. Just send us all your proof. So I literally compiled all my emails and just proved everything. But I literally faxed probably like 300 pages to the IRS. About a month later, like, all right, you're clean, you're good. I was like, oh, cool.
That was it?
Yeah.
Oh, wow.
Yeah, no, I was scared because I was young.
Yeah,
I'm like, oh
right,
my God,
yeah.
I'm getting audited. I'm going to go to jail.
That's what a lot of people don't
doing
focus on.
time.
Yeah, I know. It can be pretty bad, but most of the time it's not. But like if it's fraud and like someone's really trying to like evade, then you can go to jail. But that's where have an advisor to like bounce these questions off so you don't end up in jail. There was a guy in Vegas that was a CPA. I forget the name and I wouldn't drop it.
No,
Goldberg, attorney too, right? Wasn't he didn't he go to jail too?
Who?
Randolph Goldberg or something like that. He was
I
an
don't-
attorney, dude. He went to jail too
I
for
don't
like
know.
2
I don't
years.
doubt it. But what this CPA was doing, he was doing payroll for people. And what happens with payroll? You withhold a part and supposed to send it to the IRS. He was never sending it to the IRS.
Wow.
So hey, here's your $10,000. We're gonna take $2,500 and send it to the IRS, but he never was making those deposits.
Jeez.
Banked all that money and they caught him.
Wow.
Wow, that's crazy.
So, yeah.
Yeah, I always hear crazy stories, especially like if they're like rich and famous. Like you always hear the tax guy just ran off with a bunch of their money, and then now they have to pay it.
Yeah.
Like a Wesley Snipes situation or something.
Right? Yeah. Yeah, that's the hard part is like you have a lot of confident information. And so that's where that's why I like the business though is I almost look at it as like rental properties, right? Like clients are, if you do a good job, they are likely to come back. And so as you grow, same thing with being an agent. If you give good service, ideally that next person when they buy or sell is going to come back to you. So that's the nice thing about the business. It's like a recurring revenue model.
Yeah, no, that's nice.
Cool.
Did you have any questions? Or?
Yeah, I was gonna. Are there any special rules or like laws that you would recommend to like, for example, Section 179? What is that?
So 179. So okay, this is a good topic. Bonus depreciation is big for everybody. Meaning, I buy a car, I want to write off the full car now. Because before not before, but normal rule is I buy a $50,000 car or some sort of asset like that. I'd have to take, let's say, over 5 years. So 10,000, 10,000, 10,000, and 10,000, 10,000. Now though, with bonus depreciation, I can buy that $50,000 car and write that off completely.
Okay.
Right? Assuming it's 100% business use. Yeah. Mm-hmm. But now that rule is done after this year for 100% and goes down to 80 the next year, and then I believe 60, 40, and so it's going to be phased out. And so, so bonus so we'll call it Section 179 or bonus depreciation is a big rule that a lot of owners should pay attention to because it helps near the end of the year, they'll buy cars or equipment, stuff like, filming and things like that, write it off to get the big expense.
And do you have to have it under your business's name or, it could be, okay.
It can be still technically in your personal name, but you have to, for example, a lot of people were trying to get the Escalades prior to year end and they were putting deposits down, but they weren't getting the vehicle. You have to have the vehicle to have the write-off. So now we have all of 2022, but that's something to watch for near year end. And then on top of that, I would really focus on the S Corp. The S Corp alone would save people a lot of money. They just have no clue. Honestly, two things, keeping good records, which not a lot of people do, and then the S Corporation are the two biggest things of how people would save the most money quickest.
That's a perfect client right there.
Yeah.
Okay. And then what about like rental income? Is it a good idea to write off majority or all the rental income or?
Yeah.
I would, and most of your rental income is going to show a loss anyways because of depreciation on the home. So that's the best thing about real estate, right? So not only if you get to like the Trumps and the Kiyosakis who they make all this money in their business and then they have all these rentals and portfolios that they wipe it all out and they pay zero tax that you hear in the news. Yeah. On a small scale, somebody who makes 50 grand, they go out and they buy a rental property, it cash flows 3,000 a year. On paper, that property will lose money. Yeah. And that's good. I just walked away with $3,000 of cash flow and I lost money on paper, which is fine because I pay no tax on it. So that's why real estate has its, advantages for sure.
Yeah, gotcha.
But rents, so yes, I would try and write it all off but assuming it's not cash out the door because you don't want to, right? You don't want to eat your cash flow and have no cash flow unless you're just thinking about appreciation maybe, but yeah.
Right.
Definitely.
Yeah. Cool.
Yeah.
That's all I have for me.
Yeah, that was all the questions that came
I think we
up.
covered most of the most important thing, right? Like the S Corp, crypto.
Yeah.
The S Corp's important. I would leave viewers with this. It's like, if you're making money in a business, keep track of where your money's going, in and out, right? So that if your accountant comes to you and said, hey, what's your profit and loss, right? Your P&L look like, they have it. So you could pull it within a day. And then start to balance and see like, hey, are my numbers to where I need an S Corp? Because you're going to save on some tax for sure. Like on 100 grand, you'll save 6,000 at least.
Okay.
Oh yeah. On 50 grand, you'll save 2,000, which is $2,000. It's a lot of money.
Yeah, it's a lot of money.
What kind of Facebook ads or, could you start? What else could you do with 2 or 6 grand?
Yeah, you can take it to 200 to $1 million with that kind of money.
You could.
Yeah.
With the right network and stuff. So yeah, I would say getting organized and, keeping track and having an advisor there. That's like where you want someone who knows what they're doing in the industry that you work in.
Gotcha.
Yeah.
And then this is a stupid question. So are you taking on clients right now?
Oh, for sure. Yeah. So, right. Like our model at the beginning was you want your taxes done, we'll do it. Now our model is, because what does that lead to? That leads to a ton of clients and small fees.
Yeah.
Now we want bigger clients, so bigger clients, bigger fees, less clients. So it's more of now like, if you're organized and you have your things together, you're ready for an advisor, that's where we come in. We sit with you. We talk about like, what are your goals for the next 5-10 years? Does your tax plan match what your goals are? Like, are you optimized with how many LLCs you need and things like that? Like really more of the advisory and the strategy on how you can save most money. Exactly. Because that's where the money is for us and that's where the most value is for the client. Preparing tax returns, I'll leave that up to H&R Block, right?
Yeah.
So that's where the client style is different. But the second you're ready for an advisor and you really want to move the needle, then yeah, for sure. And so yes, we're taking clients. The easiest way to get a hold of us on our site, you book a call. It'll be with Nick on our team and he does all of our calls. He's sort of like our consultant, our onboarding consultant, and he talks and tells you like if it makes sense. Because that's the thing, like we're not in the business of taking everybody. Like that doesn't work for either. So but yeah, if it makes sense and you're looking for an advisor, we'd love to help for sure. Especially if you're in real estate. That's our main lane.
Nice. What's your URL?
So truebookscpa.com.
Truebookscpa.com. Okay.
Yep. Got it.
CPA.com. And yeah, right there it'll kind of explain the service and then you book a call with Nick and Nick Cope is our guy.
Awesome. Cool. Sounds good. So yeah, let's wrap this up. So I appreciate you coming in today and thank you for answering all of our crazy questions and our viewer questions.
It was a lot of fun. Thank you, Matt.
No, it was.
I love it.
Thank you guys for tuning in. Stay tuned next week. We do have a gun store owner. We're gonna do the same thing, ask questions, see how much money they're bringing in after COVID, because everyone started buying guns after COVID. So I'm very curious about that. So yes, subscribe. Listen in. Thank you guys. Have a good one.
Guys, take care.